Money FM 89.3, the best of the afternoon update.
Money FM 89.3. The Singapore office market, which experienced a strong recovery post-COVID-19 with a 14.9% increase in Grade A office rents since early 2021, has not seen much activity recently. Data the URA released in October has shown that the office rental index for the central region registered a 0.5% quarter-on-quarter decline, and median rents of Category 1, a proxy for the best office spaces in the city centre, based on contracts signed, declined by 0.8% quarter-on-quarter in Q3 2024. Industry observers say the slowdown can be attributed to the vacancy spike to 7.8% following the completion of IOI Central Boulevard Towers, which added 1.2 million square feet of office space in the last few months. This, coupled with limited demand from major sectors such as tech and the growing prevalence of flexible working arrangements, has caused rents to plateau. Small-scale demand from private wealth and professional services firms has not been enough to counterbalance the decline in large-scale leasing activity. So, is Singapore still attractive to businesses in spite of these challenges? How will the current conditions augur for Singapore's office market in 2025? Will there be a tighter supply of new offices from 2025? What will growth in this market look like? Alan Cheong, Executive Director, Research and Consultancy at Savills Singapore, is my guest expert today to answer all those questions. Alan, great to have you join me on the show.
My pleasure.
Now, Ellen, let's get straight into it. You're a veteran in real estate research with over 30 years of experience. What do you think? How did office vacancy rates end the year in 2024?
Well, we believe that a lot of the shadow space, that is space that had been taken up by tenants, but they find it to be excessive space. They don't need the space, so they try to lease it out, and they have been filled up recently. Now, with regards to vacancies, for CBD Grade A office space, we believe that vacancies could be ending the year at about 6.2, 6.4%. That's pretty healthy.
Okay, in terms of the CBD Grade A office spaces, can you provide a bit more insights into current availability and perhaps in the future as well?
In 2024, a lot of the major leases were not due for expiry. They were just out there for renegotiations for rents that will come due, the contract will come due in 2025, 2026. So nothing much came about this year. And because of that, the market was sort of caught in a doldrum. And that characterized the market, and rents therefore headed like nowhere. We are 0 to 1%. We forecast that it will end the year at 0.8% year-on-year increase for CBD Grade A office space. So 2024 was a pretty dull year insofar as office leasing activity goes.
And what do you think the availability of CBD Grade A office spaces would look like in the future?
In 2025, there isn't much supply in the CBD other than 553,000 square feet of net lettable space coming from Keppel South Central. Mm-hmm. This year, we have 1.3 million square feet from IOI Central Boulevard. So next year's supply is muted. But on the other hand, many leases are due for renewal into 2025 and then 2026. But tenants are in no mood to expand. They are likely to perhaps right size, and that will continue on in 2025. So we may see vacancy rates increase a little bit, but because vacancy rates are still within a manageable band, say not exceeding 8%, I think landlords are still able to keep rents stable. So we think that rents will end the year in 2025 between -1% to 1%. So we will see some volatility on a quarter-on-quarter basis.
You know, office vacancy rate has been a commonly used metric to assess the health and performance of the market. And recently, the tripartite guidelines on flexible work arrangement requests started to be in effect since December 1st. So this will require employers to consider formal requests from employees for flexible work arrangements, including 4-day work weeks and remote work options. How do you see this impacting businesses in terms of space optimization?
Well, I guess in 4-day work week, in fact, we call it 3-2. 3 days in the office, 2 days at home. That has been practiced since 2021. So in other words, it's already priced into the market. The market is accepting the sort of hybrid work arrangement, and this tripartite work agreement doesn't really change the dynamics at all. What is more important or more concerning will be how the rollout of AI applications and adoption by multinational companies may change the number of workers they need to have in an office in Singapore, or how many workers they can have working remotely using AI as a tool.
Now, speaking of AI, there has been a lot of buzz when it comes to, AI and tech, which could drive demand. Companies like OpenAI planning to establish offices in Singapore are certainly sparking some optimism for future growth of the office market. Having said that, which sectors do you see to be the key sectors driving demand in 2025?
It will be, I think, the traditional sectors, still the same, the banks. And when I say driving demand, it means driving lease renewals and driving even right sizing. I won't say that it could be, it doesn't necessarily mean that demand is a net positive. It could still be a net negative. There will be demand coming from some tech sectors, especially the AI sector. But you must look at it in its proper context. AI companies coming to Singapore, I think they are just setting up forward observation bases, so to speak. And the number of people they will hire are probably going to number less than 10, in the tens at most. They will likely to take up office space in co-working locations and to suss out the matter. The demand for AI is basically in their head offices where they need AI researcher and scientists. That's where they need the space, the laboratory space, the R&D space, and office space to basically roll out the product. Once they roll out the product, they don't need that much space in office space, so to speak, compared with traditional companies in fintech, web designing, etc., etc. So while there is demand coming from AI companies, don't put your hopes too high that they will take up, hundreds of thousands of square feet of office space.
Okay, so you don't think these sectors will greatly change or shape the future landscape of office market?
I would think that, on the contrary, AI may be a dampener for office demand because multinationals, when they look at their cost part of the P&L, they find that let's start replacing expensive labor with AI, or we move labor out of expensive locations, and then we right size. They will not leave a location in its entirety, but they may right size, and they may right size significantly. So this part of the equation is still, the direction we're likely to see that happen, but the exact amount of space they do not require, we are still unclear at this juncture.
Okay. Looking at another aspect of office property, there is an increasing emphasis on ESG compliance spaces in Singapore, and leasing green certified office buildings is becoming a non-negotiable for occupiers. So what can developers and landlords do to differentiate their offerings?
In our CBD Grade A office basket, all the buildings are at the very least BCA Green Mark Gold standard, Gold Plus standard. So it's already a given in our basket of office buildings in the CBD. The only way the office buildings owners can adjust to the market conditions is to be flexible with regard to the amount of space the tenant may want. So if the tenant wants small space, and I think today gone are the days where you have multiple tenants coming in, each asking for 50,000 square feet of office space. Today, it could be someone coming in with just a requirement for 2,000 square feet, 3,000 square feet. So the landlord must be able to accede to those requests. And to do that, sometimes you can't really chop up a floor because of accessibility to the lifts, to the fire escape. You can't do that. So you may have to rent out the space either in whole, or you work with a co-working operator to jointly operate a co-working floor or floors in your building, to allow flexibility for both your large traditional existing tenants to have excess space or flexible space, and also to accommodate maybe the new tech companies coming in. Remember, the new tech cycles are getting shorter and shorter. Previously, we were Web3, and they just went off in a puff like that. A cycle that lasted 5-7 years, and it's too short. So now we are not sure whether this current weak AI tech companies, meaning we have not gone to generative AI, how long will they last in this space before they get replaced by the next generation of AI? So they need smaller space to remain flexible and to maintain their overhead. So landlords must also understand that too and offer flexi space.
I see. Okay, looking ahead, what do you think will be the growth trajectory of office rents in 2025? Will vacancy rates drop? Will we see more activity in the office market? Taking into consideration macro factors like lower interest rates, inflation, against a backdrop of global uncertainties.
I guess in the short term to medium term, let's say 2025, office vacancy rates will remain pretty flat, but with a bias to increase. So currently we may get about 6.2 to 6.4 in terms of vacancy rates, but by 2025 we may see that inch up more. Rents, as I mentioned, is likely to trend sideways, between -1 to 1%. So we will see some volatility on a quarter-on-quarter basis. We are likely to see the year end with no change in rents for CBD Grade A. But that comes at the expense of the Grade B and Grade C buildings in the CBD and non-CBD suffering, because tenants will want to be in a best location with the best address and in an ESG building, which the Grade A office buildings offer. So this migration from non-Grade A to Grade A basically masks the underlying structural problems the workplace may have, as we will still see strong take-ups or high occupancies in Grade A space in the CBD.
All right. Thank you very much, Alan. I appreciate your time and insights. He is Alan Cheong, Research and Consultancy Executive Director at Savills Singapore. Thank you.
Thank you.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.